morning, everybody. Welcome to Forex.Today. Thank you for posting your trade plans here and sharing and collaborating with our community. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Namaste. Throw your diamonds in the sky. Thank you for being a client. I appreciate you. Whoop, whoop, whoop. Got to do Jay-Z style, right? Thank you very much for being a client. Oh, Robert? I don't know what the heck that is. Were you doing something bad? Robert. Yeah. What are you using? Mosaic 1.2? Really? You must be logging in from multiple IDs or sharing your password or... Wow. Yeah, whoa, hey, it's not me, it's the security system. What are you guys doing? Logging in from your private jet and then logging in 12 hours later from your yacht, and it's like, dude, yeah. All right, well, let me look into it. Let me look into it. Anyways, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Every session 7:30 in the morning, Monday through Friday, here at Forex.Today. Thank you for being a client of TradersWay. We appreciate you. I am here to help you with technical and fundamental analysis, trader psychology, share my years and years and years of experience as a retail Forex trader, as a professional Forex trader. And we want you to succeed. So I don't tell you what to do. I teach you how to make decisions on your own so that you can be an independent, profitable, successful, and maybe even happy Forex trader. So once again, thank you for being a client. And if you have not signed up, please do. Show your loyalty and respect by visiting TradersWay.com. And literally, your demo account will take you 1 minute to set up. So there's nothing holding you back from greatness. And where's my desktop? All right, and you should see pretty colors. How does that look? They all good? Got the funny, pretty colors? Okay, so one of the things I want to do right off the bat is yesterday we moved the stop because I didn't like the way that this move here, I guess now I have to zoom back in. I didn't like how this move was based on Fibonacci, right? Let's go back to the basics, right? Based on Fibonacci, I would expect a lower high, right? Lower high, lower high, lower low, like this one, right? Retracement. See, significantly less. I guess I got to do it this way. Let's go all the way back. Let's make this all the way back to the beginning. All right, let's go like this kind of stuff, right? Drop, 50% retracement. Totally okay, sell, sell, sell. And this orange line is the previous level of support to the left. So my prediction is somewhere around that line, it should be the new resistance, what I call a roll reversal. So the down, 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 up, up, sell. Great, that worked out wonderful. Then we kind of rinse and repeat here. Okay, lower, low. This time it's 618. Perfectly acceptable Fibonacci retracement. The 618 predicts a move down to the 1382, which it actually did. Great, even better. So I was letting it run. Through that period, everything was golden. Okay? New lower low. If you look left, I have the old support marked. I dragged it across. It retraced, made a 382. Great. Nice move. Still letting it run. But that was supposed to make a 1618. It made a 121.4. Whoa, 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 whoa. That's the red alert, right? Whoop, whoop, whoop. But not panic yet. So what we talked about yesterday was this. And I'm like, what are you talking about? Not only did we not make the extension lower, but this is our session yesterday. We were up here. 100%, 786 to 100% retracement. I'm like, I don't feel comfortable with this anymore. You guys remember that? I'm just like, you know what? There's something wrong here. So I jammed my stop. Locked in 9,000 pips. Boom! Yeah, no joke, right? Remember, I moved it. 9,000, locked in 9,000 pips. Profit. Not bad. It took me 3 weeks. What are you going to do? Got knocked out, stupid 9,000 pips. But it looked, we looked at it and said, wow, even though there's no higher high, there's something that suggests that risk is increasing, and I should probably lock in my pips, right? Isn't that part of risk management? To recognize the risk is building before it's happened. That's what a risk manager does, aka portfolio manager, right? That's what you're really supposed to be doing, right? Risk is more important than the reward. So we said here, wow, something's wrong, right? Spidey senses are tingling. I don't like the way this feels, Sarge. Remember? I don't want to go on patrol. I don't feel good about this one, Sarge. Right? So we jammed the stop and boom! Something bad happened, but we were prepared. Cool. In essence, we predicted a giant green candle, right? Because we were short. And we're like, there's nothing that says freak out, but maybe we should, right? So anyways, so we jammed the stop and I got busted up. Now there's one mini lot on the Turkish lira yen. So I have it here. Let's focus on. All right, so there it is. We shorted December 18th. And it doesn't have the exit time. Oh, it exited, right, the 9th. So is that about 3 weeks, right? Is the chat not updating or something? You guys are quiet today. I guess because we've talked about it a lot. I just wanted to like document it in a video. We can always, you know, I want to document this. So anyway, so I got knocked out yesterday. The stop loss was at 377, so even lower than we are now. Isn't that cool? So I got out at the 786. That's cool, right? Look at that. I got up. Actually, I got to move this down. Come on, guys. I got to move this down to 377, right? So it's more like this. So that's where I'm out. Cool. All right, so let's do some calculations. Calculator. Windows and its, awesomeness. The basic calculator doesn't work for me, so I had to download a new calculator. Yeah, brand new laptop calculator doesn't work because the software is so advanced. Anyways, let's talk about it. I believe my margin is about $80. I was upset that I never even tried to calculate it before, but I was hoping the per margin would be on this report, but it's not. Anyways, all right. So I believe it's about $80 approximately to short dollar Turkish lira. We're short for 3 weeks, okay, for the $80. So I made 205 over the $80 I actually used. That's my actual margin. So I actually deployed $80 of my money, right? TradersWay leveraged it, and I exchanged my leveraged money for Turkish lira. So, I had a lot more than the 80. I had 100 times more than the 80, and then that got put into the market, right? That's why leverage is great. But I actually only used $80 of my money. Cool. So my return in 3 weeks was 256%. Let's just dumb it down. 250% return in 3 weeks. Isn't that gorgeous? Now, it's only one mini lot. Well, why didn't you put down like 1 billion mini lots? Right? Why not? So it's just like, it's just interesting to break it down, though, isn't it? Right? Just one mini lot. We let it run for 3 weeks until there was risk started to increase in the position, so I locked in the profit. And that's what 9,000 pips paid me. 9,000 pips equaled 2.56 times, right? So 256%. But what's missing? Magnificent! The reason I got in. The reason I got in hasn't been accounted for. So, on top of the pips, the 9,000 pips, clear, we made $15.55 in 3 weeks, approximately, right from the 18th to the 9th. Well, is that statistically important or relevant? Well, let's take a look. So in less than a month, I earned $15.55 interest payment. Every day I earned a little bit, 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 I earned a little bit. I could hold it for a year, and every year, or every single day, absolutely every day, money is added to my account. Boom, boom. It's going into my account. It's not like you own a stock and you buy some Apple stock and it goes up 2%, but you don't get paid the extra 2%. You just hold a stock that is worth 2% more, and then the next day it comes down 2%, and you've lost your 2% and you never actually owned it. In this case, even in the days where, because I'm short, right? I'm long Turkish lira. So, short US dollar, long Turkish lira, so this comes down. So even on the days it went up, I still got paid interest. I love it. It's like a bond payment. It's just, but I collect it every single day, regardless of what's happening in the market. It's going up, it's going down, doesn't matter, boom, you get paid, right? So anyways, in the 3 weeks, $15.55 was added to my account from my original $80 investment. 19.5% return. 19%. Well, let's just call it 20. It's not cool. It should be rounded up, right? But so anyways. So let's just call it 20. It's just easier. 20% interest payments collected in 3 weeks. 3 weeks. 20%. All right. 19.4375% collected, not like mythically, and that's not per year. That's paid in the bank mine. Is that awesome? Plus the 250% return. This is why I like to be a currency trader. So before this, I was a venture capitalist. I don't really like to own stock. Why would I want to own stock? All the CEOs are lying because, well, they're paid with stock options. So they're all lying to you. Plus, they don't want to lose their job. So they come out and lie. And then even then, I buy a stock and it goes up 100%, but I still haven't gotten paid. I don't get paid till they get out. Right? In this case, I'm mark to market. This is great. I'm getting paid in real time. And that $205 profit on the $80 investment, that was liquid all the time, completely liquid. It was already there. It's already in my account. Right? So when you have open positions, so I'll go to my open positions here. So I have some open positions. So this $300, so I'm up 300 pips right now. The $300 is floating. I can spend that $300 and not even get out of those positions. No, Debisa says, why do some platforms have these weird, long, short, and spreads and all that kind of stuff? Well, first of all, it's based on the intermarket, and second of all, very often that's how brokers need to do that to make money when you have small accounts. So if you have like $500 in a trading account or $1,000 and you're trading these minis, there's not a lot of money in it. So this is just a standard mini lot account anyone at TradersWay would open, right? So there's nothing amazing about this. It's just typical. But if you had, $10 million in your account, you can get much better spread, swaps and stuff, right? Right. So that's why it is. Most retail traders that are trading mini lots and micro lots, they're not carry trading. First of all, there's most pairs don't have a carry anymore. We're getting there in the world, but we're in a low interest or zero interest rate policy in most central banks and all that kind of stuff, right? So it hasn't even been a problem. But most retail traders, they're just trying to make 15 or 20 pips here and there, in and out. They're holding trades for minutes and hours. They're not holding them for weeks and months, right, and that kind of stuff. So it's just not even necessary, and it's just simply ways for brokers that maybe have tens of millions of dollars worth of positions in the market for their clients, all in these little micro trades. It's a way for them to collect the interest. It's not a ripoff, but they have to make money because they're charging you so little on spread and all that kind of stuff, right? It's just a way to earn income from the aggregate, right? So Jonathan or Johan, what also Debisa is getting to is you have to pay attention to which way you're going. So if I had bought this pair and it had made $205 on the way up, I would have lost 20% of that because I would have to pay interest. I'd have to pay the 20% instead of collect the 20%. Okay, so when you're doing carries, remember I set this up 3 weeks ago based on a big discussion we had on macroeconomics. We did all that first, and I said, well, based on that, this pair should fall, so we made the trade, and the whole thing was to let this run as much as possible, right? Thank you, Jim. Right? So you understand? So we set this up fundamentally, took the trade technically, and then I let it run so I could show you that if you do pay attention later on in life, 5 years from now, when interest rate differentials from major central banks are different, that maybe New Zealand, Japanese yen could have a significant carry, and that's what you'd be long. See, when I first started trading, like I've done videos, you can just Google it or YouTube it. I did videos back in like 2004 on that conferences telling people about how I'm long Kiwi yen and collecting like 850% a year in interest payments on my positions, right? And because New Zealand was paying like 8 3/4, and I had to pay for the loan basically from the Bank of Japan, and it was like 0.25%, right? So I had to borrow $1 billion from Bank of Japan, and it only cost me 0.25%. Then I take my $1 billion and give it to basically the Bank of New Zealand, and they were paying me 8 3/4% on my $1 billion. I'm like drunk on interest. I'm like, oh yeah, by the way, if you're up 1,000 pips, it's a $100 trillion profit, right? So it's just funny. So we're not there yet, right? New Zealand ain't paying 8 3/4%. So I had to use a Turkish lira to say, look, someday this is going to be important to you. Like the conversations we've had in the past. John Taylor, the first Forex hedge fund manager, back 30, 40 years ago, started FX Concepts. And they were making an absolute fortune trading for, institutional investors like pension funds that didn't want the risk. So what FX Concepts did is they hedged everything so they wouldn't lose any pips, but then they collected all this beautiful interest. And so I found this John Taylor guy because I wanted to know who the highest paid Forex trader was, right? Because I'm like, I want to know who the king of my market is so that I can kill that king and be the biggest, right? You got to know, like, who's your role model, right? So anyways, so I find the king of our market, my role model, and like, who's this John Taylor guy? And according to IRS tax filings, according to, because you probably make more, who knows? But according to the IRS tax filings, this guy paid himself for decades $250 million a year. I'm like, boom. Well, that's what I want. That's what I want. That I need to depose the king so I can be king, right? So I thought it was really cool. But then I did some research. Like, these guys didn't even make pips. It's not like they knocked down 1,000 pips here, 1,000 pips there, and all that kind of stuff. I'm like, what? So they were just smart the way that they hedged, so that they always collected that carry. But they had so much money. And by the way, the $250 million was his personal salary, or what he personally collected. It wasn't the firm's return. Not the firm, him. Yeah, so it could be king, right? So anyway, so going all full circle here, this is what we set this up. We talked about it before I even pulled up the Turkish lira. Remember that? We talked about it. We looked at Baltic Dry Index. We looked at some other leading or lagging indicators, and we discussed macroeconomics, things improving, what typically will happen in currencies, balance of trade, and all that kind of stuff, leading us to some various things that maybe we should consider commodity currencies, maybe we should consider some exotic currencies that would sort of be the third in line to benefit from current and future economic conditions globally. Remember the aggregate, macro, not particular countries, all countries. So if China and the United States does this, then Europe and Canada and Australia will do that. And if those things happen, then the next in line would be like a Turkey and in more emerging markets, right? And so we put all that together. And then we said, well, let's look at the USD Turkish lira, and we threw that down, all based on just a carry, and them being third in line for the improvement of macroeconomics. We're not even looking at charts yet. Then we pull up the chart, and we end up putting on a trade way back, I think it was about here, right? I think it was about in here somewhere. And rode it all the way down until my spidey senses started tingling based on technical analysis telling me, whoa, 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 we're vulnerable to a reasonable pullback. And on this time frame, now, I could have just left it forever, right? But whatever, so I wanted to show you how to manage your risk, and of course we were right. I locked in 9,000 pips, it knocked me up, walked away with 250% profit in pips and 20% in interest collected off my original 80, walking away with, I don't know, how much money was it? 250 bucks off an $80 investment, whatever. But we put it all together, fundamentally first, then technically, and then we managed to carry as long as possible and ran it all the way through, and there's the results. Now, I know it's only one mini lot, but it's an education. This is just the $30,000 account, not a $30 million account, right? Well, what would you do if it was $30 million? Just change the zeros. It would be the same trade. So you're like, wait, it's only 250 bucks. Well, yeah, but you just, that was a $25 million trade, right? You would have done the same thing. In fact, along the way, too, I was showing you how you should be adding to the position along the way. But whatever. So I just want to put a ribbon on it, like that trade is there, or that example is, we put the ribbon on it, it's all done. There it is, full cradle to grave life cycle of how to put a trade together fundamentally and technically. 9,000 pips, 250% return plus 20% interest collected. Could be worse, right? So what does that up to? 275% return in 3 weeks. Cool. That's called currency trading. There you go. Done. Now what are you going to do with that knowledge the rest, are you going to look at Turkish lira the rest of the year? It's up to you. All right. Now moving on to the next lesson. At that same time, we talked about, even though the yen had been weak for weeks, the yen had been weak for weeks. And we said, we understand the yen has been weak for weeks and shows no signs of strengthening. But I believe, based on macroeconomics, that there may be a situation in which the yen will strengthen. Even though it was weak yesterday, weak the day before, weak the week before, weak the week before that, it was weak. Lots of weakness, right? Lots and lots of weakness. Okay? So, bear that in mind. We said, I think it's going to strengthen. So, we shorted there. And we have now we shorted at 136, and we're now at 134.20. Like, that's 200 something pips, bro. But we talked about it up in here, and then it was down. Isn't that nice? There's the entry, the stop's at break even, and down, down, down she comes. Now, we talked about it not just a day ahead or a week ahead. We actually set this up months in advance. Isn't that funny? To say this day, right? I want you to actually type it, because it's not for me, it's for your brain. You really need emotional and intellectual buy-in for this to hook. Did we talk about this trade on this exact day 6 months ago? This is where you have to, in your mind, it's a yes or no question, and then you have to reach out and touch the keyboard and write it all down and click the right keys, and you're going to have to say this publicly, so it's all very emotional. So yes, 6 months ago, we said on that day, which is Monday, what was that, 2 days ago? Yesterday, right? That particular day, the Japanese yen will get strong and we will short the Japanese yen pairs. 6 months advance to the exact day. That made 200 pips in the first 24 hours. Looks about, yeah, more than a dozen people agree to that. Anybody else want to agree to that? It's important. I know you're like, Wayne. No, it's for you. Because again, to get this into your blood to be a currency trader that can do it on its own, you have to have full buy-in intellectually and emotionally. So doing all these things like the tactile experience of touching the right keys, but even touching the right keys means you need to know how to spell yes or I agree or that is true, right? When you do that, now you have to language. How do you spell the right words to get your, so you're using all kinds of parts of your brain where I'm trying to reprogram your brain, right? So good. So now we got more than 24 people. 6 months ago, we said on this day I would sell. I sold in the first 24 hours. And remember, there's nothing that says down previous to that. And then boom. 6 months in advance to the day notice when the market was going to drop. Cool. Lucky. Love it. So that is the euro yen. It fell. So is it only the euro? Well, here's pound yen. Pound yen also fell starting that same day. It had a hiccup and then down. That's Theresa May and all that kind of stuff. But pound yen fell to the exact day that I said would happen. Okay? Dollar yen, I'm not trading because to me, I'm actually bearish on both longer term. So I stay away from that. Okay? But you could see it fell that exact day when I said the Japanese yen would gain strength. That's actually what it is. It has nothing to do with anything else. 6 months ago, actually longer, I mean, I've been doing it every year, so I'm just making up a number. 6 months ago, we definitely did talk about it. We definitely talked about Mutual Fund Monday, the Monday after non-farm payrolls of the first of the year, the Japanese yen was going to get strong. Boom. So even against the dollar, boom, look, it got strong. Cool. This is Aussie. Now, Aussie, look at since November has been screaming, heading up there like a SpaceX rocket with the military satellite. But check it out. Look at where I sold to the pip. That's my entry because I'm a swing trader, so I sold at the open of the market. Check that out. Isn't that beautiful? So I'm short at 89, and it's now at 88. So that's the first 100 pips down. But look to the accuracy. Remember, 6 months in advance at least that we said this day all the yen pairs would drop. Down, 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 up, up, down, down. And it seems pretty downish. So that's Aussie. Kiwi. Okay. I did short this one somewhere in here, and you'll notice I think you noticed earlier I got knocked out. It just didn't fall fast enough, and I jammed my stop a little too close. I probably got stopped out right as it fell. So bummer. But there were things on here showing me like look, it didn't fall like all the others, so it wasn't ready yesterday, and so anyways, that happened. CAD was also a little more difficult because of oil, but anyway, so I sold that. Look at this. Look how it skyrocketed on the Canadian jobs report on Friday, and so I sold it Monday. Well, it's actually Sunday night for me. I sold it. It gapped down. It rallied up. It filled the gap. Remember, I have a video out there how to trade gaps. So it gapped down, filled the gap. I sold it. And now that one, once again, I sold it at 91, and yeah, it's only up 50 pips. I mean, but it's also falling, right? Many unhappy CAD yen bulls. Yeah, well, they should have known 6 months ago that that day the yen was going to get strong. So, what do you think? Accurately predict the future? I hope I didn't over-exaggerate. I just want to show you that we put together trade plans. The key to success. Macro first, macro fundamentals first, then technical analysis is easy, isn't it? Isn't it easier if you've done the fundamental trade plan first, where I could say, look, this day it's going to fall, so look, I'm at resistance, sell, and all of a sudden I'm up 300-400 pips in the first day, right? And it wasn't just 6 months ago I threw something out. It's literally every day, practically every day. Practically every day we talk about these cycles. Well, boom, there's another one. But I think the more interesting one is like the lira, where we talked about changing. It's not seasonality. See, the yen is seasonality. The other one was global macroeconomic changes, right? And both were fundamental. Then we went out for the technical trades. Then we did exactly what I teach you to do every day. Nothing miraculous, no miracle, no crazy weird indicators, no tricks or flips or turns or, just like, let's sell this one at resistance because that's what we want to do, because we're there on this pair for logical, intelligent reasons that are easy to understand, like business cycles or economic conditions, and boom. Remember, last month in December, we put several trades together and made a couple of thousand pips in December. Now we flipped it around. We're going the other way, making well, in this case, I'm up 300-400 pips now, but I just got knocked out of a 1,000 pip or 9,000 pip trade. I know it's lira, so, but it's still funny to say, right? But still, even if you translate that into the value of like a euro dollar, it's still 400 pips. It's nothing to laugh at, right? Nothing to be ashamed of. Wayne, it's not really 9,000 pips, it's only 400 pips. Okay, well, it's only 400 pips, I apologize. But cool, right? Oh, Robert says, newbies on Friday didn't believe me. It was funny to me, yeah. Well, good, right? So there it is. The message I'm trying to get across is you can do this. You can do this. You're capable of this. You and me, we work together. Might take years, doesn't matter, right? I'm a grad student at Harvard. It will take me years to get my degree. So what? It might take you years to get this, but you can get this. I will graduate from Harvard. You will become a professional Forex trader, and it will be fine. Okay? Okay? But do you believe me now? Do you believe me you can do this? That it's teachable and I can teach you? Great. Right? So, please visit TradersWay.com and open an account. Maybe you'll trade some Turkish lira. Who knows? You might have never thought about it before. Right? It doesn't matter. And it's none of these little things like it's Turkish lira or something. It's having a trade plan. It's sitting down and thinking about the evidence in front of you, and you make a decision. That's really what it's going to be. Because when you're a professional, just this is why clients come to you. Wayne, I don't know what's happening, but if I had some money, what would you do with it? And I said, well, let's talk about risk and reward and what you feel comfortable with, and what opportunities may lay ahead and what risks are associated with that, you know, and then off we go. But you have to be the one with the answers. That's why you need a bias. This is why you need to do fundamental analysis so that you can talk about the People's Bank of China messing with the currency. Did you notice that the last couple, the last 3-4 days? They've been messing with the currencies and stuff, starting to slow the economy down. Wait, didn't we talk about that like yesterday before it happened? And didn't we talk about it like 3 months ago? That once their 5-year business planning party is over, that then the government's going to start slowing the economy down? But we thought about that. It was a hypothesis. It was a guess. But once you have that, then you start looking for evidence-based investing or trading or whatever you want to talk. So it's a bias. It takes forethought. It takes data. Okay? Bias is like, Matthew, the US dollar is going to be weak for the next 6 years. That would be a bias. Or, Matthew, for the next 4 months, the Japanese yen will be strong. That would be a bias. I am bullish on Japanese yen. Well, I was bearish in Japanese yen since the 3rd week of August. Not the 2nd week, not the 4th week, the 3rd week. And I told everybody that 6 months in advance, that the 3rd week of August, I'm going to start selling Japanese yen. So I did. September, right, that's the 3rd week of August. September, pound yen went up 2,000 pips. My bias now is I want to buy all those Japanese yen back. So now I'm up 300 pips for the day. But that's a bias. Once I have a bias, then trading is so much easier, Michael. Or, sorry, Matthew. Matthew has the question. So much easier once you have a bias because, look, if I want to buy Japanese yen, the yen is on the I guess I have to do it this way for you because the camera's backwards. The yen is on this side of the currency pair, which means when the currency pairs are falling, this currency is rising because the other one's falling. Okay? So let's say euro, yen. So when euro is falling, yen is actually rising, right? So if the chart, wow, this is weird. It's so backwards for me. If it's falling down like this, that means the euro's falling. That's why the chart is falling. No, wow, it's weird. I think you get it, right? So I am selling Japanese yen pairs because I'm buying the Japanese yen back. Those trillions, I don't know how many, right? All that yen I sold since the 3rd week, I'm buying back now, right? And I'm slicing and dicing through people's stop losses. Because the market's heavily long, great. I'm going to kill these guys. Because I'm smarter, I'm better, and gosh darn it, people like me. So now I'm selling into that, hitting stop losses, right? But I have a bias. So I say, look, I am now selling the euro yen. So that means I just sell at resistance. I sell retracements. I know what I want to do before I want to sell it tomorrow. I don't know what tomorrow's going to be like, but I know I want to sell it. So then tomorrow when I open up my charts, I say, where's the resistance? And what are the market conditions for selling? Does it look good for selling or not good for selling? But I'm not trying to figure it out on the fly. I don't open my charts like, I wonder what I'm going to do today. It's going to be amazing. I couldn't imagine being a trader, opening my charts and wondering, what am I going to do today? Oh, looks like the MACD tells me I should be buying. Like, really? You're in control. That's you, the professional Forex trader, in control. Where every day you open your chart and you're like, I wonder what I'll do today. Have no idea. Oh, look at MACD. Well, MACD doesn't make the decisions for you, bro. Doesn't make decisions for your client, right? You can't sit down and tell your client, well, every day I kind of look at the MACD and I kind of go from there, and then I put a trade together and it's like 15 minutes of excitement, and then we make a profit. Or, I mean, it sounds so stupid, but this is what retail traders do, right? So you have to be able to sit down and explain to your client, well, right now I'm buying Japanese yen. I'll probably be doing that for the next 3-4 months. Why? Fiscal year end for Japanese businesses. And they're like, wow, that sounds really intelligent. Yeah, it's a normal part of their business cycle. And I like to take advantage of it. See, Japanese corporations must pay taxes on April 1st. So they repatriate money back to Japan at calendar year end in anticipation of paying taxes at fiscal year end. So there tends to be some Japanese yen strength, which, with your money, sir, or madam, I will take advantage of. And then about 1 week after that, I will stop. Yeah, I will stop buying those. I will take profit, right? You get to keep 80% of it. I keep 20%. And that cycle will be done. And then I'll move on to the next part of the business cycle. And during the summer, when volatility is low, we tend to look for short-term trades simply to earn income. It's income-based trading, it's quite different than simply, a position or an investment-based trading. That's more of a wealth-based thing where we're in a trade for 3, 4, 5 months. In this case, during the summer, because of the lower volatility, we're more income-based trading. It's smaller, more conservative trades, but it helps us pay the bills. But really, we're looking at great opportunities for year-end. And then we'll start building the portfolio back up. And they're like, oh my God, Wayne, that sounds so good. Right? But that means I know what I'm doing before I even look at a chart. And I've explained this back when, you know, and maybe it's because it's old school. I'm old school, right? So when I first started trading, there were no charts, right? So I would sit down and for an hour a day, I would fill out an Excel spreadsheet with volatility data over the last 24 hours. Okay? Right? I would actually spend an hour. I'd have to fill the whole thing out. I'd look at the volatility data, and I put that in for this currency and that currency pair and that currency pair, and I'd break it out so that my spreadsheet would then tell me which individual currency was the strongest volatility base, like went up the fastest and the most during that period, and which one was the weakest in that period, and then I'd match them together, and then by identifying the strongest versus the weak, and I'd actually write it across at the bottom of that, and then I would look at the spreads, because back then when I traded pound yen, it was like a 17 pip spread, right? No joke. Like, now you're complaining like 4 pips on a pound yen, 4 pips, dude, right? So anyway, so some things were really expensive to trade. So then I'd break it down, well, which ones were the most affordable and all that kind of stuff. And then I'd break it down to the exact, let's say, currency. Like I want to look at selling Aussie dollar and Aussie yen, let's say. And then I'd go to a different software package because I got that from my platform. My platform didn't have charts. So I got all the volatility from my trading platform. The trading platform was you just click the buttons and manage the positions, right? And back then they didn't have trailing stops and they didn't have OCOs. You had to do everything manually. But then I'd go to my chart, which was a whole different thing, and I'd boot that up and the charts would load up. And then I would say, okay, well, I'm looking to sell Aussie dollar and Aussie yen. So then I'd go to the Aussie dollar chart and say, where is the resistance? See, I already knew what I wanted to do. I just didn't know the price that would give me the best market conditions. And then I'd look at Aussie yen. Where's the resistance on Aussie yen? Does it look? Am I at resistance? Am I near resistance? Did we already kick off resistance? Are these market conditions favorable for me to sell because I already know I'm a seller? Which is way different from someone new that enters the market that pops open an MT4 chart and says, I guess I'll sell that. Boom! Right? So it's sort of ass backwards. You need to know what you want to do before you even look at the chart, and that's what I mean by a bias. Now, I didn't know anything about fundamentals. So that's why I looked at volatility data. And we now call this like a relative strength exercise, but I did that based on recent volatility data and did all the way around, right? Now, Matthew says, so the fundamentals gave you confidence. Well, I don't know if it was fundamental. It was technical data, but not technical analysis, or maybe a form of technical analysis. It was really a relative strength exercise. But I didn't have confidence. If anything, it fooled me into confidence, which is fine. So I call that confirmation bias, right? So it just made me felt like I was doing the right thing. But look, bro, I made a lot of mistakes in the beginning, right? So, and I put that in my book and all that kind of stuff. Like when I first started trading, I sucked because I'd never traded anything before ever. I was a venture capitalist. I wasn't a stock trader. I wasn't a commodities trader, right? I didn't grow in a pit. Take 2. I mean, I wasn't one of those guys, right? So no. So I started in Forex. That's why I love Forex. Forex is the best thing ever. Okay? So it was I sucked, but like I said, in the beginning I sucked. But over time, because of my hard work and blood, sweat, and tears for years, over time I sucked less and less. Right? As a trader, I suck a lot less now than I did 15 years ago. So I'm happy with that. It's good. Right? Couple of thousand pips last month you and I did together. A couple of thousand pips this month we did together. Going the opposite way, but all fundamentally logic. And by fundamental, it's not even that. It makes sense. It just makes common sense. There's no London breakout, pop and flop, and chase this, and if that flips at this time with the thing on there, and you straddle it, so either way you can make money, right? You really bought into that? Like, oh, we could straddle it, and whether it goes long or short, we'll make money. Boom! Look, I made 35 pips in 3 minutes. That's how I'm going to get rich. I mean, that's so silly. Why would you want all of that if we can talk about moves of thousands of pips 6 months in advance? Right? You made 33 pips on your London breakout strategy? Who cares? It's so stupid. Wouldn't you rather make 1,000 pips on a trade you can talk about 6 months in advance? Why do you need a dog and pony-ish little trick show, right? Smoke and mirrors. I don't know. So anyways, you can do this. You can be successful. You will get there. And I hope you honestly believe it. And let's move on. Let's go through some commodity currencies, and I haven't looked at, we could replace lira with gold if you want. I think that's what I found that. You want to do some XAU? Cool. Cool. Now, does anyone remember my bias for gold in December? I remember we had it here. We had this, right, and we had this. And I remember I had a bunch of red arrows that said this multiple times, right? And then it collapsed on me. But all in here, more importantly than the arrows, were the discussions. And what were we predicting here in these discussions? I'll give you a hint. It's not a discussion about gold, but I opened this chart and said gold would go up based on one simple assumption. Robert said it. Anybody else confirm? Yes. US dollar weakness. Now why? Now I'm pretty sure most people are telling you dollar strength, but I was saying again, it was a discussion of macroeconomics, wasn't it? Why would you buy the US stock market at all-time highs as a foreigner when you could deploy your new capital? Because look, if you bought the Dow at 8,000, 9,000, 10,000, 11,000, 12,000, you ain't getting out as we cross 20,000, 22,000, 23, 24,000. You're in for life, right? So the only people that get out on a 10% decline in the stock market are scalpers and people that got in super late because they're stupid or very unfortunate, right? Or it's just new money and they get stopped out at break even, but the original trades from 10,000 points ago, they're there forever, right? So the new money, the new capital, how about this? Let's say the stock market comes down 10%. Cashes a lot of people out. What do you do with the cash? Put it back into the stock market? Maybe, but why not other stock markets? Why not buy some companies in Europe, for example? And that's what I was saying back then. Euro should be getting really strong, dollar should be getting really weak. Even though the Fed's raising interest rates and we got negative interest rates and a bond buying program out of the ECB. So every textbook will tell you the opposite, but I was telling you euro strength, dollar weakness. But if we get the dollar weakness, then gold should go up. And I haven't been a buyer of gold for like years, right? You remember that? I said somewhere between 1,100 and 1,000 we'll find a bottom. It just happened to be exactly the middle. But we're talking now years of conversations, years that gold should fall down, you know, that once we get, the line in the sand is 1,000, and people are going to start defending it once you break 1,100, so somewhere between 1,000 and 1,100, we'll probably find a bottom. I'm just going from memory because it's the same logic. And so once we get down to there, then, well, that'll be a bottom for gold. I don't know, but gold won't rally until we get better macroeconomic conditions for the dollar to weaken. Okay? There's years of conversations in minutes, right? And so I said here, I hope it goes up. I said here, I hope it goes up. Here, I said, and then it collapsed. I mean, cry, cry, cry. But now look at, now we made our higher high, and maybe we start getting stuff like this. Right? So how do you put the future trades together now? Well, it's very simple, right? It's very similar to past conversations. Let's do it like this and drag this across. Okay? This whole area actually would be a role reversal where you might look for something like this. You've got to keep an eye on the seasonality. Pay attention to the US dollar over the next few weeks. And I've been open about this. Based on the change in economic conditions, I'm not entirely sure how strong the US dollar will get. So I'm focusing more on sort of Japanese yen getting strong for the next several weeks. Okay? So if dollar gets strong, though, along with it, which it has in the past, then gold will come down. Doesn't matter, though, because what we're looking at, let me change the colors here. Whether you're a bull or a bear, whether you think the US dollar is going to go up or down, all of that is irrelevant. This is still support. So you just have to make the decision. Are you a buyer of gold? Watch the US dollar to help make that decision. And if we break below this, that changes things technically, doesn't it? So that's why you have a job. That your job is to watch these things and make decisions, sometimes tough decisions. Okay? One of the things we talked about was the Mexican peso trade, right? So I sold that, and I think I got out down in here somewhere. Very interesting. That's another one we set up in advance. I don't buy this pair, Juan, but you totally could. I could see that. But then you're assuming dollar strength again, which I'm not saying is correct or incorrect, right? In the past, I have seen U.S. dollar get strong this time of year. Not predicting it because conditions are different than last year and the year before and the year before that, quite dramatically. So maybe this year the dollar just doesn't, right, get strong. So for example, what if the stock market doesn't decline and we're on our way to Dow 30,000? Then US dollar will stay weak. It wasn't last year, the year before, the year before, the year before that. Well, 3 years ago, we were choking on our own blood, economically, so the dollar got strong. There was lots of reason for that. But right now, I think we're back in like drunk on money days. I don't know about your country or your neighborhood, but around here, people are drunk with money. They're so unbelievably rich based on the stock market going up, and everything's going up, man. Everyone is rich. The housing prices are going up. If you own things, you're drunk on money. It's just ridiculous. Now, there'll be a reckoning, right? But will it be this year? Maybe the stock market does just keep going up. Why? Companies are profitable. Consumers are spending. They're borrowing money. They're buying houses. They're fixing up houses. I mean, things are pretty decent right now. Why should it stop? Why? Because the Fed's jacking up interest rates to 2%? Right? And they might have to slow it down, so it might be 2% for the next 10 years, right? And Trump is lowering taxes, and Like, oh my God, right? Trump is lowering taxes. This thing could go to down 30,000. Will never slow down this year, but next year might be bad. Well, whatever. No one's worried about next year. Nobody remembers yesterday, and nobody's worried about tomorrow. All they know is they have on their heated water beds, they have stacks of cash, and they're just rolling around in it. Yeah, I'm so rich, right? So maybe it doesn't get stronger, but on the day when there is trouble, dollar may get stronger again, sure. Just remember, this year is not like 5 years ago. Okay? Emerging markets are going to do well, right? Right? Lester says taxes will cause companies buy their own stock. They've already been doing that for years, though. They've been doing that for years. There are bigger worries, like the Bank of Japan owns something like 70% of the Nikkei. Nikkei is at an all-time high, right? Or not an all-time high, but like a 30-year high. You notice that? But the problem is the central bank is 70% of the stock market. The stock market, not the bond market. Like, holy crap. Yeah, you guys want to talk about that for 1 second or 1 minute or a couple of minutes? The interesting thing about that, or do I need to go back into MACD crosses and stuff? Okay. What does the Fed own? The Fed bought $3 trillion of what? Bonds. Different types of bonds, some mortgages and all that. Fine. But what happens to a bond or a mortgage? Because a mortgage is like a bond, right? A 30-year bond, right? What happens eventually? What if the Fed just stopped? Just stopped buying anything and just did nothing? Eventually, bonds mature because there's a time stamp on it, right? So whether it's yesterday or, tomorrow, next month, next year, 5 years, 10 years, 20, 30, whatever, the bond matures and it just goes away. It just doesn't exist anymore. So in theory, if the Fed did nothing for the next 30 years, then in 30 years, their balance sheet, and as far as assets, where it shows what they own, would be zero. Except for like the Fed buildings or something. But they wouldn't own any bonds. They wouldn't own any treasury at all. They wouldn't own any mortgages. It'd just be empty. So the Bank of Japan owns close to 70% of the Japanese stock market. When does a stock expire? Yeah, so let me ask you a question. How does the Bank of Japan get out of this? Yeah, well, if it sells, it is the market. So it'd be you're selling against yourself. You are the vast majority of the market. You are the market. And who's going to buy it? Yeah, that's the other question. So selling to whom? Who's going to buy it from you? At what price? And by you selling, don't you bring your own market down? Right? And extremely slow if it's possible at all. But it could be 100 years. If ever. Or they implode. And I think it's very, very possible. Not this year, next year, but You know, what if the next 25 years, the Bank of Japan just like defaults? Just like, I don't know, like what? I don't know what happens. How do you get out of it? Do you give people money to buy it? Is that how you do it? So you print some yen, and give it to someone so that they can buy the stock market? Hey, Eastern Europe did it. So like, but it's bad, right? Isn't it a bad outcome? Or Abenomics works. They fix their demographic problem, which is 10 times worse than the Abenomic problem, right? And the Japanese become so filthy, stinking rich, then they start buying their stock back from the Bank of Japan. Okay, there's one way out. That seems risky, though, right? It seems ambitious, even a little bit hopeful. Certainly optimistic. So what's the other case? I mean, can Japan fix their demographic problem? Well, let's see. They'll have to change their whole family structure and culture. They'll have to open up their borders to foreigners, which is also a cultural problem. And very few people outside of Japan speak Japanese, so that maybe they'll have to convert their workforce to English speaking. Well, that sounds easy, right? We could do all that quickly. It's a big problem. Big, big problem. So, if you want a PhD dissertation, maybe you start writing a paper on how the Bank of Japan can exit, right, their quantitative easing and easy monetary policy and get rid of completely their equity portfolio. You got it, because you do that. Maybe you got Nobel Prize coming, so you better start on it. But it's an interesting thing to think of, right? So, well, let's call it a day. I'm tired. My face is actually going numb. I know, what is it, 8:30 in the morning and I'm tired. Yeah, I'm a currency trader. So anyways, thank you very much for being part of my team. Thank you for showing your loyalty and respect every day and the hard work you put into this. I appreciate it and I see it. I hope you're really starting to intellectually and emotionally believe but also commit to succeeding, because I think there's a breakthrough that everyone has where just one day you just know you can do this, and that if you fail, it's a personal failure and you don't have personal failure. So like you get to a point where you fight for your life. It becomes less of, can you figure this out, or it's a fun game, or maybe I can make a lot of money, or maybe I should do the options course, or maybe I should get into real estate, or maybe I should buy vending machines. You get away from that sort of weird entrepreneurial thing to now you're fighting for your life. And when you get to that where you see it in front of you now, and you know it's there, and you know it's real, it's worth fighting for, and it will be the thing that changes your life, the life of your spouse and children and friends and family. It just changes everything, and you're willing to fight tooth and nail to make that happen. And I hope I bring that, whatever it is, that little catalyst that changes it from a cool, fun opportunity to a life or death fight that you're willing to put up, because this is it. That's all. I'll see you tomorrow. Thank you for being a client of TradersWay. Remember, visit TradersWay.com and open your account. And hey, if you watch it on YouTube, subscribe, huh? Peace on earth. May the pips be with you. May your profits be above average. Cheers.